Hey guys, welcome back to the channel where we are selling options and trading the wheel strategy until we hit $1 million. I hope all of you ended the year 2025 very successfully. If you can see on the right here, we finished at 15.15% on the year of 2025, and already in the first week of 2026, we're up 0.7% or $2,000. So as you can see, the account value is sitting at $282,010, and Friday was a nice green day of that 1,974. So I haven't uploaded in a couple weeks now, so this is going to be a last 2 weeks update. We've been pretty active, even though markets have been low volume. The Santa Claus rally has ended mostly this week, and as I'm recording this on 1/3 in 2026, the U.S. Bombed Venezuela last night and captured Maduro and his wife, and are taking him into custody in the U.S. and being charged with narco trafficking and as well as some other crimes, which does set a little dangerous precedent for the future, but is also a lot of a lot of people are wondering: is this bullish? Is this bearish for the market come open on 1/5? And I think it could be both. But uh, I'm sitting on a lot of cash, so ready to capitalize on whatever happens. But we'll see what happens next week. So getting into what has been realized over the last 2 weeks, I realized CLS for $399. That is the company that makes these Ethernet switches for all these AI data centers. I realized BWXT for $207, which is a company that has over a $7.5 billion backlog and as well as government contracts. Realized one hood put for 156, but also open another. Realized some of my IBIT puts, $155, SoFi, 109, and then XOP, 155. I realized this last Friday. So if oil is very green next week, I will be sad, but nobody went broke realizing profits. So total, we're up 1,181 on the realizations so far in these last 2 weeks, but total up 1523 or 0.54%. So starting off the new year strong. So again, what this channel is about and this journey is the wheel strategy, where I start at the very top here. I start to sell puts, collect the premium. If the stock drops below the strike price that I sold the put contracts on, I will have to buy 100 shares of that stock that I sold the put on, and then at the strike price that I sold it during expiration. And then I will go and turn around and I'll sell calls and collect premium until it reaches above that stock price and the wheel just continues. I think of it like selling insurance. So this content is not financial advice. Please consult a licensed financial professional before making investment decisions like usual. Don't just blindly follow what I do. So hopping into current activity, this is a stock that I traded about a year ago, but it ran up on me so much. I was trading it in the 40s, and then it just ran up all the way into the hundreds, 140s, and I thought, you know what? I think it's just gone too far. Let me wait for a nice consolidation here. It's been trading sideways since October, within this $40 range here, and I have been selling puts at that lower end, that 105 strike price. So if you see from the realizations, I realized one at 105, but I'm doing something called laddering. So as you can see, it's different. Selling 105 puts, same strike, but different expirations. Up here, January 23, 2026. January 30, 2026. So we're about break even on those, down a couple percent, a couple dollars, nothing that moves the account at all. But yeah, laddering because I don't know, I don't want to go all in all at once, so I'm staggering them by one week, buying the dips. So selling them at that 105 strike price, that blue line right there, which serves as a nice support and resistance level, as we can see from this day in December, the super nice bounce off. So we'll see if it touches that again and how it reacts, but stock is trading under its 90-day SMA, but consistently above its 200. And RSI is in the 42, so I'm comfortable with buying since it's in that lower range there, indicating that it is oversold. Going into SoFi, this one has had some very juicy premiums. Also a stock that I used to trade on the channel but haven't traded because it just ran up on me too much. But now it's been consolidating. It's been trading sideways. It has been getting rejected from the 90-day SMA, but I am selling near a support level at that 25 strike price. Previously, I sold 23 strike prices, which I realized. But as you can see, in about 1 week, we have two put contracts open right now, and are going to realize. I'm going to open up a few more is the plan on dips. Friday was a nice green day. We are up 23.5% or $23 on SoFi. So going into the current portfolio, as with alongside some realizations on the Bitcoin ETF, Bitcoin has also been trading sideways. And, I saw this dip and I saw an opportunity. Bitcoin was actually down for the year 2025. I think it was about down like 6.5% compared to, other safe havens like gold and silver, and other precious metals, which were up in the hundreds of percent. I think gold 60, silver a few hundred. So, Bitcoin hasn't been performing like the safe haven that people like to talk that it is. I mean, if the US dollar goes down, where do you go? I guess maybe precious metals are, but I think Bitcoin will still do well. It's just been having a little bit of a consolidation period, and I think 2026 will be a green year. I don't think Bitcoin has had two down years in a row, but you guys can correct me if I'm wrong, since like 2012 or something. So I sold, you guys have seen me in these last few weeks, past few months, sold some put contracts at 56, got assigned, sold some put contracts at 53, got assigned. So we are still down on those, but we've been selling more put contracts and DCAing down as it's been consolidating in the 48 strike price range, which has served as a nice support level. And that's something that I've realized and also been laddering. So as you can see, I am up 80%, which if you know, I would usually take profits at 50, 60%, but there's only 1 week of expiration. So sometimes you need to ask yourself, would I take this trade right now for 1 week for, I think this is like $40 profit, $45. I'm like, yeah, I would. $45 in 1 week on $4,800 in collateral. I would take that trade. So, and as I mentioned earlier, still down 7% on that 5,600 shares that we got assigned, and down down $145 or negative 1.41% on that $53 strike price that we got assigned on. So, Friday was green. We'll see if it gets back to that 53 and kind of breaks this resistance here and starts trading up in the new year. So Nucor Steel, this is a long-term trade that I did not sell, and I realized a lot of losses, a lot of learned lessons in 2025. But Nucor, I've sold calls on, I've collected dividends. This qualifies for the long-term capital gains instead of short-term because I've held it for over a year now. So even though we are still collecting some money along the way, I think this is going to run back to the 170s, 180s, and right now we're up $654 or about 4%. I think this is a 10% play, and early just because I've been holding it for so long, and because I have the tax tax benefit of the long term capital gain. I will be selling a covered call at in the 180s or 175, but I do believe that the stock has has had a dip and has been recovering ever since, and I've been just riding the wave along with it. So selling very conservative covered calls. Quanta Services, this is another one that you ask yourself, I'm up $628, expires in 2 weeks on January 16th. I still have, about $300 in premium to collect on this contract. Would I take this trade right now for 2 weeks? So if Quanta doesn't have an options chain that's weekly, it's a monthly. So it's either 16 days or like 50 days. And I believe that the stock will run back up to the 470s, back up to all-time highs. So you got to ask yourself, even though you're up 68%, right, over about $630, would you take this trade today at the 410 strike price? Pretty conservative, below the 90-day SMA, a support level. It's had a bounce here, it's had a bounce here, it's had a bounce here, and once again a nice bounce there. I mean, This just chart looks fantastic to me, and I don't want to trade it 50 days because I think that goes into earnings also. So would I take this trade today for $300 with $41,000 in collateral? I mean, yes, I would. So that's why I am still holding, but might realize this in the next week depending on the run up. And as well, might sell a new put at the 410 or 420 strike price, also expiring in 2 weeks. So we'll keep an eye on it, but really like this utility services. This is building out the energy infrastructure for the U.S. that it will be needed to support all these AI data centers and power needs. So sell the shovels to the gold rush if you haven't quite gotten on my strategy with all these new stocks that I've been trading these last month. So this is the portfolio update on current positions. As you can see, I am sitting on a lot of cash. I mean, with the VIX being, I think it's in 14, high 14s. That's the volatility index. I mean, premiums are not as juicy as they are when VIX is higher. There's a slight greed in the market. People are buying. So I'm, deploying strategically. But as you can see with the portfolio, I went over HOOD, I went over Bitcoin. The IWM Russell's trade is sitting at about 4% profit. This was at 6%, so it has had a nice dip, small caps, but still holding, but wanting to realize this at that 7-8% profit. Nucor went over. Pfizer up 50%, but again, 1 week until expiration. So happy to get assigned 2 contracts there. Power, and then SoFi we went over. HIMS, pretty flat, not much action. It's been slightly down, so I don't know if I'm going to play this stock again. There's been a lot of insider selling. This used to be a channel favorite, but now it's kind of fallen off a bit, and same with the prices dip, but thankfully I've only profited and haven't held it through the dips. So very up on this channel on HIMS, but there's just better opportunities out there. So current open P&L is 2,800, and again sitting on a lot of cash, about 153,000. So year to date we're up 15 point, or excuse me, last year to date, December 31st, 2025, we are up 15.15%, which we did trail the indexes unfortunately, but beat the bond indexes. So again, you're in advance. I made some mistakes. Even though it did match my portfolio goal of at least 1% per month, but we did outperform the bond indexes, but again, played it a little bit more defensively than I could have, left money on the table. So, lessons learned, some stock tickers that I wouldn't trade again. But overall, still very happy with the results. 15% is a great return to do consistently year over year, if I am consistent. So going into the performance of this year, we are crushing the indexes and the bond indexes as well. We are up 0.7% on the year, while the SPY is up 0.21, Dow is up 0.33, and the MSCI, the ex-USA, is up almost 1%. So that we are trailing them, but we're beating the US indexes. So the portfolio is sitting at $282,011, which is about 28% of our goal. So thank you guys for tuning in this week. I really appreciate it. And I'm excited to start the year off, 2026, and see what we accomplish this year with a couple, revisions and learn lessons, and, reminiscing over what happened in 2025, what we can do better, what we can improve, and what we can learn. So I'm excited to start this new year off, and we'll update you guys next week on the journey. Thank you guys so much for tuning in. I'll see you guys next week.